Hello and good morning, everyone. Welcome to yet another episode of the Market Snapshot series. And today we'll be having quite a good discussion. And the main topic for the day is a $1 million question. Is the current US stock market in a bubble or not? And if yes, how do we approach trading? If no, how do we approach trading? So as I wait for more people to join, I can see Smith FX is already in the house. Good morning. Can see Kay in the house. Mukita Rebecca in the house. Welcome, guys. Thank you for joining. Remember, this session does not constitute of any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So we know a lot has been happening over the last couple of weeks. Today, we officially enter the third week of the US government shutdown, which means that the impasse in US Congress continues. And at the same time, major economic reports from the US will not be coming. So this includes data like the CPI, the non-farm payrolls, GDP data, and many other reports. So the Fed continues flying blind, and we are getting closer and closer to the next Fed meeting. And if you look at the CME Fed Watch tool, you'd notice that the market is pricing in a 97% probability that the Fed might be cutting rates on the next meeting, and that should be around 29th. So at the same time, the tensions between US and China, the trade war, the sanctions, and at the same time, tariffs on individual products continue to be a key theme of the day. So we know that technical analysis has been completely out of the window. We are literally in a market where we trade based on Trump tweets or from Trump's updates. So all this is happening while gold and silver are hitting into new all-time highs. So the stock market seems like it doesn't care whether there is a shutdown, whether the unemployment rate is rising, whether the Fed is cutting rates. It seems like the stock market is just moving higher and higher, and each week, each month, we continue seeing new all-time highs. So what does this tell us? When a period of time where gold, silver, and other precious metals are at all-time highs, the US stock market is at all-time highs, and also the crypto market seems to be approaching new all-time highs. So is the US stock market in a bubble or not? So I'd really want to hear your views from the comment section. Try and answer this question. Is the US stock market in a bubble? You can see a very funny name at 11:11 a.m. comment, but okay, nice trick. Marion, hello. You can see home. Good morning. Tom's reality. Good morning. All Sports TV, Odiwa, Ibzan, Jason. Guys, thank you for joining. You can see Wamaloa tuned in. So pretty good question as we start this session. What does it actually mean when market being in a bubble? So when a market is in a bubble, you are trying to define whether the current valuations are based on reasonable expectations of stock market performance, whether that price truly represents the valuation of the stock market, or whether we are in a speculative territory. So a speculative territory means that it doesn't matter how much earnings the company is making, how much business the company is making. Investors are already in a positive feedback loop where the valuation is way above what's the real valuation of the company. So sometimes it can happen when, let's say, there's a sequence of positive news about a stock. Investors might get very positive, very bullish about a stock. They keep buying more and more. And then at some point, the price exceeds what's the real valuation of the company. And in that case, we say that it's in speculative territory or in a bubble. So The last time we had such a big valuation in the stock market was in the year 1999, heading into the year 2000, or what we call the dot-com bubble, where any company that was investing in an internet product, because internet was the biggest phenomenon, they would get all these investors coming in, pumping money into these stocks, saying this is the next big internet company, and that created valuations that were not making sense, even though most of those companies were not even making profit. So the same case can be identified today. We know that over the last 3 years, the one thing that has been driving the stock market is AI. So as long as a company mentions that they're investing in AI in their earnings call, we would see big spikes in the stock performance. So a lot of major companies in the Nasdaq had to announce that they are investing in AI, and that led to a very strong rally in the stock, and that has been happening since the year 2022. So since we saw ChatGPT, all we have been seeing is more LLMs coming into the market, more GPTs, more investments, billions of dollars being invested into AI, data infrastructure, chips, technologies, as well as chips manufacturing, where the biggest winner so far has been NVIDIA, which has become the very first company to ever hit $4 trillion. So uh, this does not reflect in the earnings of the companies. So while some companies like Meta can arguably prove that since we invested in AI, this is the growth we have experienced, most of the other companies that have invested in AI have not reaped the benefits. So is this AI boom, AI trend coming to an end? When are we gonna have a point where now we start comparing the investments that have been made into AI versus the returns that we could be seeing reflected in the company reports, especially in their earnings reports? And we know that the third quarter earnings season is beginning this week. Of course, we'll be seeing the banking earnings first, and then we proceed into tech stocks and many other stocks in the SP 500. That will tell us a lot about what these companies have been doing, especially in the third quarter of this year. So, that being said, that means that we expect increased volatility in the US stock market. And now we look at a couple of articles, try to understand what this means. So let's begin with the forex market today. And as you can see, so far since the beginning of the day, the strongest currency has been the New Zealand dollar and the UK pound, which are up 0.36% and 0.25% consecutively against the USD. Whereas the weakest currency has been the Japanese yen, which is slightly lower at negative 0.05% against the USD. So as for the week, that is since the week started, the biggest gainer has been the pound, up 0.61%, the Australian dollar 0.56%, New Zealand dollar 0.44%, whereas the weakest currency seems to be the Canadian dollar, which is down 0.28% to the dollar. And this can be correlated especially with lower oil prices that we have been seeing throughout the week. So that being said, let's look at something that we have already just pointed out. So this is Yahoo Finance. We know Yahoo Finance is a data aggregator. So they basically get articles from other top news media and then aggregate into one site. So as you can see, judging from just the highlights in the market, TSMC, which is Taiwan Semiconductor Manufacturing Company, profit beats jumping about 40% to a record amid AI boom. So you can see AI boom seems to be the main thing in the markets today. So for a company that manufactures semiconductors, we know that normally when a company announces better than expected earnings, we tend to see a small increase, let's say 2-3%, and for some volatile stocks, maybe even up to 10%. But then a 40% jump for such a big company is usually is usually in speculative territory. And that's the case we're trying to argue today. So, on the other hand, you look at why Wall Street thinks gold and silver boom is not done yet. So, whenever there is increased risk in the market, investors tend to hedge that risk in order to protect themselves from the downside. And one of the ways they do this is by buying safe haven assets such as gold and silver. And what we have been seeing is gold and silver rallying over 60% each since the year started. And this is not usually the case. Since I began trading over 10 years ago, we have never seen gold rally by over 60% in a year. So this is the first time it is happening since the 1970s. So looking at other key highlights of some of the aggregated articles, let's see. Trump confirms US-China trade war. We know that that was last night. I believe it was an update. Let's see if I can find one for that. Yeah. So this was 11:26 p.m. last night. Trump, we are in a trade war with China. If we don't have tariffs, we don't have national security. Those are some of the key highlights that came out from the Trump speech. So President Trump Q&A, I think we'll go to Supreme Court when we decide on tariff authority, one of the most important cases ever brought. So clearly, the fact that Trump is pressuring China with more and more trade war, this is destabilizing business, especially for companies that are operating in between the two countries in terms of supply chains. And as a result, we are seeing investors being more and more fearful. So, investors being more and more fearful, normally you would expect that they would be dumping US stocks, but instead, US stocks are still cruising into newer highs. So, does that mean that we are in speculative territory, or does it mean that the market is completely ignoring Trump? So, the key signal here is the strong rally in gold and silver, which means that the market could be taking both bets, meaning that they are still expecting the strong rally in stocks to continue, but also taking a safety stance by diversifying in gold. So let's look at an article from NBC News. And the article here is titled "A Soaring Stock Market Led by Tech Has Some Likening the AI Boom to the dot-com bubble." So it seems nothing can hold back the bulls on Wall Street, not trade wars or interest rates or nagging concerns over the cost of living. Fueled by trillions in spending on artificial intelligence, US stock markets are setting record highs. In the past 3 years, the tech-heavy Nasdaq Composite Index has doubled. It's up more than 100%. So Federal Reserve Chairman Jerome Powell recently called stocks very high valued. And when Powell is saying the stock market is highly valued, then you know what we are saying here. It's in speculative territory. So if all this frothy optimism has you humming planes and partying like it's 1999, you're not alone. So 25 years after the first internet bubble burst in March 2000, investors and analysts are starting to draw comparisons between today's AI boom and the dot-com bubble of the late 1990s, which ended with a crash. So some investors say AI isn't helping enough companies make money and therefore isn't actually growing the economy. Others say the massive investment deals recently announced among a small group of AI giants are effectively circular because money and stock pass back and forth between parties in such transactions. So we have seen this happen over and over again. Microsoft invests $10 billion in, let's say, OpenAI. OpenAI invests $10 billion in NVIDIA. NVIDIA invests in something else, and then something else invests in Microsoft. So we have seen these kind of circular investments, which basically mean Peter passes to Mike, Mike passes to Jane, and then everything goes back to Peter, which doesn't create real value. So billionaire hedge fund investor Paul Tudor Jones said this bubble 2.0 could be even bigger than the last one. If anything, now is so much more potentially explosive than 1999. Tudor Jones, the founder and chief information officer of Tudor Investment Corp, said this month on CNBC's Squawk Box. Back then, the internet was new and transformative. And just like today, companies that didn't yet turn a profit were some of the darlings of Wall Street. But there was skepticism too. Legendary investor Warren Buffett, known as the Oracle of Omaha, likes to look at the ratio of stock market valuation relative to the size of the US economy or the gross domestic product or GDP. So his measure, known on Wall Street as the Buffett indicator, uh, reached a record high of over 140% during the dot-com boom right before the market crashed. Today, the same indicator is above 210%, dwarfing its peak 25 years ago. So if the ratio approaches 200%, as it did in 1999 and a part of 2000, you are playing with fire. Buffett, the chairman of and CEO of Berkshire Hathaway, wrote in Fortune magazine in 2001. For now, the markets are on fire, a lot like they were in the go-go days of the late 1990s. In 1996, then Fed Chair Alan Greenspan warned of an irrational exuberance that had taken hold of investors and might have unduly escalated asset values. He would eventually be proven right, but not for 3 more years. And during that time, the Nasdaq more than doubled before the bubble finally burst. So this is another point I want us to consider. So this is not a doom session saying that the stock market is going to crash. No, I want us to understand what's really happening in the markets. So remember this particular part of our presentation today. So in 1996, remember 1996 was 3 years before the market crash in 2000. So the then Fed Chair Alan Greenspan warned of an irrational exuberance, basically saying the stock market is overvalued, just like Jerome Powell said yesterday. But then that did not materialize into a crash. The stock market continued moving higher even after the comment. So he would eventually be proven right, but not for 3 more years. Meaning that even though the central bank chair was critical of the valuations in the stock market completely ignored him and continued moving higher. And by the time the stock market was crashing, the Nasdaq had already more than doubled before the bubble finally burst. So this means that if you do a quick Google search, just ask the same question as the title of today's presentation. Is the current US stock market in a bubble? You'll find hundreds and hundreds of articles, social media posts, all having different views about whether the stock market is in a bubble or not. So today's question is not something we are trying to answer definitively by saying it's definitely in a bubble or it's not in a bubble. I'll leave that to you. What we are trying to say is that when the market is in speculative territory, especially if it's showing signs that it's in a bubble, then it can remain unreasonable for even 3 more years, and you could be seeing an entire stock market index like the Nasdaq double, and at the same time, the probability of also crashing tomorrow is still existent. There is a non-zero chance that the market could crash tomorrow, next week, next month, next year, 2 years from now, 3 years from now, and so on. And that doesn't really matter for a trader. So for us, we try to trade what we see. So unless the charts are showing that the prices are going down, we are going to continue following the trend. So if the trend has been moving up, for instance, since the year started, if you have been trading and are following the charts correctly, then you know that for as long as gold is going up, you are better off looking for bullish positions. So the same case applies for the SP 500, for the Nasdaq, for the Dow Jones. They have all been moving higher and breaking into new highs, same as silver. So you're more likely to have a winning trade if you have a buy trade compared to a short selling trade. So in that case, you know that the following the trend is good, and the trend still remains. So until we see data from our charts indicating otherwise, then we continue moving higher and higher. So that's the point we were trying to put across today. So just give me a second. All right. So let me see what you guys are saying in the comment section. If you're watching this on X, you can also comment and I'll be able to see your comment. So unfortunately, I wasn't available due to a technical issue on Monday. Good comment from LFTJ. The US stock market exhibits bubble-like characteristics, especially in tech and AI sectors. Yes, that has been the issue. Good question here. Umeona gold price mwanangu, 5K dollars. Yes, I think that's very much likely. We could be seeing gold going into an extended rally. Remember, when the stock market is unreasonable, it can remain so for longer than your account can hold into a negative position. So whenever you see such a big performance, especially in the price of gold, it's usually a signal. So from what we have been seeing, if you've been trading gold since the year started, let's go to the daily time frame. This is where we started at the beginning of the year. So this was the performance in January, February, March, April, May, June, July, August was sideways. Then September and October, we are seeing a very strong momentum. So main reason this is happening is because of the uncertainties, especially in the bonds markets. And we know that central banks, especially major ones, the Fed, the ECB, the Bank of England, Bank of Canada, they have all been cutting interest rates and as a result, reducing bond valuations. So as a result, we have seen investors go for gold, even though gold doesn't give any form of cash flow, mainly because they expect much lower returns compared to bonds. So on the stock market side, it seems to be doing really well. So with gold trading at 42.41. Remember, we just in under a week ago, I believe this was hot. The 13th of October, that is 3 days ago, that's when we broke above $4,000. So we broke above $4,000 3 days ago, and now we are already at 42.31, meaning that gold is moving by at least $70 per day. This is completely like bonkers. It's not something we have been experiencing. So every day you wake up, ask, is there a pullback in gold? And then continue looking for bullish positions. Even if there is a sharp drop, surprisingly showing that maybe there is some panic, or we have been seeing is the market picking up the trend. So we keep seeing these pullbacks every single day. So every time you have this pullback, as long as the trend remains, think that the that the pullback is a gift. The dip is a gift. Every day you wake up in the morning, say the dip is a gift. And that has been the philosophy of gold since the year started. So, good question. What does speculative territory mean? It means that when people or investors are taking trades in the stock market, they are not looking at the valuation of the company. They are not looking at whether this company is making profit or not. They are just simply buying because there is a positive feedback loop. So sometimes the stock market price can be disconnected from the company performance, especially when there is this positive feedback loop. So what this means is that if there is increased demand in a stock, and let's say a lot of people buy the stock today, it moves up 2%. Then tomorrow, even more people realize, oh, these guys made money with trading this stock. So they come and buy the same stock and then drive it higher, maybe another 2%. So you go and tell your friend, yesterday I bought this stock, I'm up 2%. Today I bought it, I'm up 2%. Your friend also comes in, they also buy, and then they are up 2% tomorrow. So that positive feedback loop can extend for a long period. And at some point, the valuation of the entire stock will be so high compared to the real asset and the real performance of that company. In that case, we say that the company is in speculative territory. So the way we do this is by comparing the price to earnings ratio of that stock versus its industry or sector. So if let's say you have a semiconductor sector that is moving trading at let's say 12 price to earnings ratio, and then one company is doing what 200 300 price to earnings ratio, then that company is definitely in speculative territory. So good morning, Derry Musk. Thank you, Chinagram FX. Can we say that the DXY is now bearish? Could it be just a correction? Yes, definitely. The DXY seems to be bearish now. For a while, we had seen the dollar waking up, but then you can already see that we are looking at a DXY that was moving strongly higher. But then if you connect the lowest point here, and the lowest point here, you notice that we had a slight break and a pullback. So of course, the expectation is a confirmation that we are now moving lower. So in this case, the confirmation would be if the market now extends the bearish momentum from today. So if you go to a smaller time frame and then you look at the DXY performance since morning, then you can already see that this is a hot, I would say a third consecutive day of bearish momentum. And at the same time, we had a breakout early in the morning, a pullback, and now it seems like we are going to get some form of continuation lower. So if that happens to be the playground for the dollar index, then you expect these other currencies to start recovering against the dollar, especially after the strong performance in the last 2 weeks. So you look at dollar Swiss franc, we know that it was generally trading in this channel. Last week, we broke towards the upper side in a very, I would say, breakout retest continuation, and then sharp drops in the opposite direction, indicating that the strongest currency of the year, which is the dollar, the Swiss franc, among the major currencies, has been trying aggressively to recover against the USD. So we're almost back on track, back in the channel that we had. And in this case, I expect to see more bearish momentum. So look at a smaller time frame, like the H1 chart. You'll notice the extreme volatility. But then after the sharp drop and the sharp rally, the dollar doesn't seem to be maintaining the momentum against the Swiss franc. So for instance, you can already see this shaping up into a potential reversal, and then the Swiss franc continues strengthening. So the low of day could be something that we now consider targeting going forward, especially towards tomorrow. So looking at other pairs, for instance, the euro, we were on a very strong bullish trajectory. This was the first half of the week. But now we are getting to a resistance area, and it's showing signs of bears entering. So you go to the H1 chart, you can already see that our high of day has already been formed, and now there is a good chance that the euro looks to retest the area again. So this is a trend line on the H4 chart. So the market has already retested the resistance, pulled back downwards, but then it seems like we could be bouncing from this area again. Remember, this was the previous resistance here and also part of yesterday's high. So you look at how we have tested that area here, and instead of breaking and breaching lower, we are seeing the market looking to bounce again and then retest the previous high. So the key idea of an overall change in the trend would be if the euro breaks above this area. So remember, I don't know if I shared this. So I'll be going back, and then just for the fun of it, we try and look at the year-to-date performance of major currencies. So since the year started, the biggest gainer or the strongest currency has been the Swiss franc. And this is mainly because the currency course, when you compare with other assets, we know gold has been the biggest gainer. And then for Bitcoin, it's up 18.62% to the USD. So clearly, we know that the CHF is one of the currencies not to joke with. It tends to be doing well even at 0% interest rates. So I expect the CHF to continue holding that momentum. So now going back here. Where is the Swiss franc? Okay, I got it. So I expect the Swiss franc to continue strengthening against the USD. So even after the early morning recovery, I expect more bearish momentum here. So that might be as well be our chart of the day, where we expect the Swiss franc to continue pushing lower, potentially reaching 0.79447. I didn't just come up with the number. It's a level that worked as a previous support area here, and that was about 2 weeks ago. So now looking at gold, we know that pullbacks have only led to more bullish momentum. We just had a pullback here in the Tokyo session, and now as we enter the London session, all we are seeing is bullish momentum. A new all-time high was formed early in the morning at 4,241, which likely implies that we could be headed for another $70 move. So if you look at yesterday, from the market open to market close, the market was up 6,100 points. And this is basically the market moving by $61. So today, since the market opened, we literally opened here. We're only up $23, and we are just starting the London session. We haven't even touched the New York session, so perhaps we could be seeing some new all-time high. So one key thing I wanted to mention, and this is something around the title of today's presentation: is the US stock market in a bubble or not? If you had been buying gold in January and February and March, then it was pretty clear we didn't have as much volatility. If you look at the relative size of candlesticks, it's smaller, and the market just kept going up before it exploded in March. So now you can see that the candlesticks are getting bigger, and the bigger they get on the bullish side, the bigger they will also be on the bearish side. So we can now remember on this one candlestick, when the market went down, let's try and find that day. I believe it wasn't very far off. So this one day, when gold decides that today is a bearish day, so from the stock market open to the low of day, it was down 94.33 points. Sorry, $94.33. So gold dropping by $94 was down 2.34%, and that's sufficient points to blow up your account. So if, for instance, you are trading with $1 per lot, then if you're trading a lot size of one, you could have lost $94,000. So if your account balance wasn't higher than that, then you would literally blow your account in a day. So what I'm trying to say is that the downside risks continues increasing the more you see the bullish momentum. So this means that whenever you're trading gold, you have to be very conscious about your stops. In case there's a sharp drop, get out, don't hold on to a losing position. So even a small dip, such as what happened here on Tuesday, uh, this is on the 15 minutes chart. So within a period of about 45 minutes, the stock market was down, gold price was down by 2.14%. This was about $89, and this is not the normal movement of gold. So if you're trading what if you're trading one full lot, you'd be down almost $9,000. I believe that's right, almost $9,000 within 45 minutes, and that's for lot one. You can calculate for lot 0.1, that would be like $900. 0.01 would be like $90, and so on. So when you see this kind of volatility happening in the market, then that calls for patience. So, for instance, $53 here from yesterday's high to London session lows. This is a pretty sharp drop, and whenever you see it happen, just go to a smaller time frame and then try to grab once you see buyers coming back in. So the same thing played out this morning, just like it played out yesterday. You can see the sharp drop, buyers come in, and then eventually they drive prices higher. So today in the morning, sharp drop, and then now we are seeing the market pushing higher. Of course, we expect 100% recovery here. We get to the previous high, and now craft a new path into a new all-time high. So as always, make sure that if you have a small account and you're not comfortable in highly volatile environment, reduce your lot size. If you normally trade 0.5, go to 0.05. This way, they significantly reduce the risk on your account. So silver hitting new highs here from $53.44 per ounce of silver is something we have never seen. And now, after a sharp drop that we saw on Tuesday, Wednesday a recovery, and today we are about to recover completely and get to the previous high and perhaps form a new high. So yes, the market is struggling to push, but we could be seeing something happening, especially in the New York session. So also remember, silver PIB value is 5 times that of gold. So you have to be very careful with silver because it magnifies your potential return by 5 times, but also magnifies your risk by also 5 times. So if you think gold is risky, silver is 5 times more risky. But the opportunity is also 5 times higher. So oil prices continue to be subdued with more bearish momentum. And now we are trading at $62.118 per barrel. That's for Brent oil, with the low of the week at 61.335. So it seems like what we are seeing here is a market that is basically moving lower and lower. And in this case, every time it attempts to move higher, sellers come in and keep pressing the market lower. So this can be seen in the sequence of highs that are getting lower and lower. But then on the lower side, it doesn't seem to be continuing with the same bearish trajectory. All we are seeing for the last 2 days is the lows now getting higher, which leads to the conclusion that this market has been in a sideways trajectory this week. So even though we opened high with a gap up, if you analyze this kind of momentum, the average momentum for price has been sideways. So this means that as per the current momentum, we expect the market to be retesting the lower trend line here. So at least some more bearish momentum, and then perhaps even a bounce, and this might continue until we see the next break. So the stock market is the main topic for the day. So after the big sell-offs that happened following Trump's promise of tariffs, we saw the Dow Jones drop by 19%. So that's a borderline crash, because when we say a stock market has crashed, we normally compare a 20% drop. So 10% is a correction, 20% is a crash, 25% is a big crash. So here we tend to see the market responding strongly in the month of May and June, recovering completely. Then July, August, September, strong bullish momentum hitting into new all-time highs. And then in the month of August, Trump renews 100% tariffs on China, leading to a big drop in the stock market, which is what happened last week. Then you see a strong bounce at the beginning of the following week. Second day of the week, very sharp rally. Yesterday, even more momentum before further drops. But then there's one thing we can identify for the last 2 days on the Dow. So what we are seeing is very sharp tails on the lower end, very sharp tails on the lower end yesterday. And then today, the volatility seems to be dying. However, once we get to the New York session, we'll be watching this closely because in the overall performance, in the overall scale of things, this week has been extremely bullish. So with the market having crossed all the way down here, and now it's trading here, then Monday, Tuesday, Wednesday, and now being Thursday, has been more of a recovery path. So on the forward time frame, we know that this was the move on Friday. So it's almost like the market has recovered 100% the move over that we saw on Friday. And now, with the stock market recovering the big move on Friday, which was mainly as a result of China, US announcing 100% tensions on tariffs on China, now we could be seeing the market recover towards the previous high. So the key thing is, are we going to see an escalation again, or will Trump chicken out as he has always been doing since he started talking about tariffs? So that's the big question, but the market overall has been ignoring Trump, and from the April tariffs, any form of pullback has been met with more bullish momentum, and I don't think this is an exemption. So you look at the UT 100, which is short for US Tech 100, representative of the NASDAQ 100 stock market index. So all we are seeing here is sharp drops, and if you go to a smaller time frame, let's say the 15 minutes chart, and then you craft from Friday's low, Tuesday's low, and potentially yesterday's low, this seems to be a likely path for the index. Give me a sec, I'm getting out of notifications here. So that seems to be the path for the NASDAQ. And then you look at yesterday's high, 24,937. So yes, today we are seeing very low volatility in the market, but there is a potential we could be seeing increased volatility, especially in the New York Open. So here we can see that there was sharp drop. Notice that Monday was a public holiday in the US. Tuesday, we had big momentum down, and then a strong rally, which did not get to a new high. Wednesday, we started with a new high during London. New York, we went to a new low and then back up. And then today, it seems like the market is pushing for yet another high. So if you are to speculate based on the price action for the week, could we say that there is a potential path here where the market could breach and hit a new high? So that remains to be seen. So potentially we could be seeing the market going for a new high, but then we know that our value area is along this trend line. So anything that drops around this area, we could be looking for more bullish positions. So the idea is if we eventually get to this area here, then we expect some strong bounce. So it's a patience game. We wait for a pullback, and every time you wake up, you look at the market, say the dip is a gift. The dip is a gift. That has been the philosophy for trading since the year started. So you look at the SP 500 is still the same thing. I'm not gonna repeat myself. So today volatility is really low. So we could be seeing a pump to the upper side, but we know that the dip is a gift. A dip is a gift. So a dip, let's say, likely to this area. Then once you see evidence of buyers coming in, we start looking for bullish positions, similar to what happened yesterday and the day after that. So that is a likely outcome on the SP 500, the Nasdaq, and the Dow. So BTC continues to be weak, especially after hitting a new all-time high about 10 days ago of $126,000. So after the sharp drop all the way to $102,000, we saw the market recover real quick. But then after the recovery, it entered into some form of consolidation. So the consolidation seems to be taking shape. But eventually, we will see where this leads us. But then at some point, we expect BTC to find some support and start moving up again. So with that being said, looking at other markets, we can start with European equities, which seems to have lost appetite for bullish momentum. So now we are seeing some kind of a pullback that likely looks like some form of consolidation for the DAX. So this is a falling wedge. Falling wedge usually represent at the top of a very strong market. Usually represents some form of distribution, or basically the market losing momentum for a while, indecision in the market before we see the next direction. So you look at the Euro stocks. Here's the forward chart. You go to a smaller time frame, you start seeing this sequence of highs, indicating some level of weakness might be shaping up in this market, even though we are largely recovering from the correlations we saw on Monday. On Friday last week, so still on a recovery path. The key question is, are we going to breach here and go for new highs? So French stock market index, despite the political turmoil happening in France, the stock market has been doing exemptionally well. So looking at the price action on Tuesday and then on Wednesday, it's safe to assume that we'll be seeing even more bullish momentum. And then on the daily time frame, we are still yet to record a complete recovery from the carnage we saw on February and March. So yes, still on a path towards the previous high of 82.93. So we are still cruising through nicely, and it's the same case as the Swiss 20 stock market index, where the carnage you saw in February and March, the market has largely spent the rest of the year trying to recover. And now that we are breaching this high and looking to form a new high, a good chance that we see a continuation from here. Norway stock market index has been one of the most chaotic ones. So after the pullback here, now we see another attempt to move higher. So quite the chaotic market. Netherlands stock market index had a sharp drop last week, but now all we are seeing is an attempted recovery that's really staggering, same as the SP 500. We keep seeing these sharp drops and then the recovery later, sharp drops, recovery later. As I said earlier in the session, the dip is a gift. So most interesting seems to be the Nikkei 225 index, the Japanese stock market index, where after the sharp drop last week, we found some key level support. So the drop didn't just drop to anywhere; it dropped to on the lower trend line here, and then from there we found a very strong support. So for the entire week, we have been seeing more bullish momentum, and now we are very close to a key level resistance. And then from the day time frame, you can see that we are on course to a new all-time high. No candlesticks on the left, except that the ones that we had last week. So this will be a key level test, whether we breach and move into a new all-time high. So we should be watching this market closely for a potential breach and moving into a new high. So for the UK 100 index, we mentioned that also this one is in some form of a drop and some form of consolidation. It's not a very sharp drop. But then overall, if you look at the trend, it's still a very strong bullish momentum. So the dip is a gift. So this seems to be forming a much bigger shape of a dip. So this is a key level resistance turned support. So potential drop towards this area could be significant. In this case, what I'm trying to say is that the market could potentially drop to this area here, and then we find a very strong bounce here that leads to a new all-time high. So let's see. I think time is almost up. It's 12 already. Checking the comment section here. Gold has been good. I just wake up and buy daily candles, Sweki stop loss to avoid weak reversals. So far, so good. I wonder if your account can withstand 1,000 pip pullback, because for most people it can't. So if you are just starting your trading and you see this, this is not good advice. It will definitely blow your account if your account is not that large. So in this case, yes, gold has been bullish, so you're better off being looking for bullish positions compared to shorts. That has been the story of the year. The key idea is to look for the best entry, and the dip is a gift. So gold will continue going up because central bank consider it neutral and don't consider current price when increasing gold reserves. Well, it's more of investors taking a hedge as a result of the risks that we are seeing in the markets today. Asian session has been lifting gold daily of late. Any insights? No, I think it's I would say cycle that we are seeing that is developing into a pattern. Will this pattern hold where gold makes the strongest rally during the Asian session, and then more downward volatility during the New York session? I don't know. I don't know whether this will hold, but there's a good chance that gold will break that for sure. So a forecast for gold, I don't know, $5K. The forecast I had given earlier in the year was that gold will get to $5,000 before Ethereum. But then from what we are seeing right now, there's a very strong momentum. And okay, at the minimum, at least 4-5. 5K is a big shot. It's a big shot. At this point, people are just throwing in numbers. Yeah, I saw yesterday some big bank in the US projecting $10,000 for gold, and I believe that was crazy. So at least 4-5. 4-5, we are looking at least what? $250 to $60 from today's prices. Yeah, that's completely reasonable, especially considering that we are seeing $70 more a day. So when you consider volatility, and right now we are in an impulse phase. So the impulse phase is when the market is trending directionally. So eventually gold will get into a consolidation phase. So if you're not familiar with the consolidation phase, I have some news for you. So the consolidation phase is a period where the price of gold might be moving sideways for some good time. We saw it happening here. You can see for this period here, this was between the month of April and the month of August. So from April to August, gold didn't basically trend. It was just moving sideways. So this is a consolidation phase, and this is a momentum phase. So you can be very sure that given the strong momentum we are seeing here in the impulse phase, we are very close to getting into another consolidation, especially as we head towards the end of the year. So while we might have projections that gold could move higher, the higher likelihood is that gold gets into a consolidation around these prices. So while we are looking to exhaust the last bullish momentum of this cycle before we get into consolidation, all I'm saying is that 4,500 is not that far off. It's just nearby. So I'm just basically saying that this has the potential to extend to that particular point. Can I hold a trade with FXPesa for a year, like a stock? Yes, you can. You just have to learn that it's a CFD. It's a leveraged product, so it will attract swaps. So swaps range to around what, a maximum of what, 4% a year, 4% of the value of the position. How do we add DXY on MetaTrader 5? Good question. You just go to this section here. You can right click, symbols, and then you search for dollar index. Also, you can just type, click on the market watch section, then you type quickly USD index, and then it will be highlighted. This is currently USD index Z5, the current futures contract. What about Bitcoin? It may continue lower until December. I doubt that. Historically, the last quarter of the year is usually the most bullish for Bitcoin. So don't give up on it yet. If in case you're not sure, just check out the historical performance. You look at December last year, November and December. Let me just highlight it for you. This was November and December last year. So despite spending several months in this momentum here, I believe this is what we were experiencing last year. So much of the price action for the bigger part of the year was around this area here. Then November and December, we had this big rally. So from this area here to this area, this was a 60% rally. So there's no telling that that could not happen this year. So you have to be positive about it, but also very technical in making your entries. What do you consider when taking a trader in terms of entry, close, or orders? So this is something I've discussed extensively on a course that I did. It's available on YouTube. So I'll be showing you these. So you go to the FXPesa page on YouTube. You have to click on playlists and then look for a playlist called Novice to Pro with Rufus Kamau. This is the course, is the beginner course where I discuss the candlesticks, market structures, trading strategies, risk management, understanding market news, building a trading system, and trade like a pro. So make sure to check it out on your free time. Looking at BTC weekly chart, I'm waiting for that 93K, 85K gap. The same pattern was seen earlier this year when we dropped from 100K to 74K. Well, I don't know. Perhaps most likely too late for that. Like we just had a dip to 102K just about a week ago, and the market responded as if it's nothing. So quite unpredictable, I would say. Which time frame is best to analyze and scalp with? I mean, that helps you to 3 to 5 positions, but still not exposing you to surprises by high time frames. Top down seems very logical for swing trading. Well, if you're scalping, it really depends. For instance, if you're scalping Euro USD, you can even scalp with 15 minutes. If you're scalping gold, you might likely want to check out 5 minutes. So it depends on the volatility of the asset you are trading. It's not just what you are comfortable with. It's basically the rate of price movement. So a market that can be making 20 pip candlesticks in 1 minute candles, you might want to check out because you might be sensitive to those 20 pip movements. Especially gold during New York Open, Nasdaq during New York Open, they tend to make big moves within a short period of time. Using small lot size, it can manage the pullbacks. I'm not a full margin trader. Thank you. So good question from Kamoni, Samuel. Beginner, can you advise me on how to go through? Yes, this is the session you need to check out. The one on my screen, it's on FXPesa YouTube. So once you go through this, practice the ideas they are in. So second thing you need to do is to attend these day sessions. They happen every day, Monday to Friday at 11 a.m., where we discuss what's currently moving the markets today. We also have a podcast. It's called the Bullish Banter Podcast. It's available on FXPesa YouTube as well as other podcast platforms. So make sure to check it out, the Bullish Banter Podcast. For instance, in the last episode, we covered trader stocks. It was a special episode we did on blankets and wine. The previous one, why Bitcoin outshines gold, fiat, and other cryptos. Quarter three market trap, Bitcoin, gold, oil, and Fed cuts. So good insights between myself, my co-host Jesse, and the various guests that we bring onto the podcast. So once you've gone through, keep on practicing and at least join a community. Right now, we have a community on Telegram. It's called the Bullish Manta Community, where we get to discuss what's currently happening in the markets, trading ideas, market analysis, and any other trade-related questions tend to get addressed on the sessions. I'll be dropping a link in the comment section for the Telegram community. So if you'd like to be part of it, make sure to check it out. So for those who don't have a trading account, check the links in the description below. Register for a trading account. And if this is your first time going on a live account, remember we have an offer going on where we are offering 100% deposit bonus. Once you deposit, you'll get 100% bonus. And from there, you will be able to take advantage of some of these opportunities in the markets. So that's it for the day. That's a wrap. Enjoy the rest of your day. Let's focus on getting more opportunities in the markets.